How about now? Can everyone hear me now? If you can, please let me know that everything is working before we get going here. Ah, there we go. That's better. All right. Well, good morning to all of you. Got ourselves a exciting little morning, don't we? Look at the VIX. The S&P futures down 4 at one point this morning. The Nasdaq was down 7, I think. Still down 5 and some change. How long has it been since we've seen that? Forever. And good morning to all of you. Yeah, I think the first couple minutes, I think I always forget that you have to add both my screen and myself to this thing to make sure that I'm being heard. So yeah, that was a me thing. So yeah, I got ourselves some action here, but I don't know that it's too terribly surprising. Now, there's a difference between not really surprised that we're moving lower versus waking up to 4 to 5% drop. I don't know that we really saw that coming. Interestingly, is the we're not just spiking with the VIX. It's pretty that's something else. So let's start with the S&P. Let's go back here to the market here, kind of recap. Friday looked semi-constructive, but obviously still a rough day. The Thursday, Friday back to back. But our forecast for the past 2 weeks have been to move lower. Um, so no real surprise. A lot of times, I like to remind everybody, I don't know if there's ever such a thing as a surprise in the market. You know, um, market's always doing things we weren't expecting it to do, didn't think it was going to do. So I don't know that it makes it a surprise, right? It's kind of baked into the cake. Um, but moving lower is what we expected when we kind of fell here out of the channel. Remember, we had weakening, we had a negative momentum divergence, bearish, and certainly weren't betting the farm on the downside. We've had the market swat away a lot of bearish things, uh, signals and signs and such lately, but that's nothing new. When you're in a pretty good bull mode, you're going to see the bearish things fail more often. When you're in a bear mode, you're going to see the bullish things. So that's to be expected. These things are going to fail. So that doesn't mean they don't work or something. It just means nothing in the market is perfect, right? Doesn't matter what it is. What are your approach, fundamentals, technicals, whatever, right? So, but we knew momentum was weakening. We knew this thing had been stretched. Had a pretty good run up from October of last year. And even this correction back here was pretty mild, right? Go back and we'll look at the VIX. You'll see we didn't really get like this big panic fear spike of any kind. So it's been a while since the market has really been, again, fearful or worried. But so anyway, we broke out of the bottom. No real surprise. Again, it's kind of what we'd expect to happen once we saw that. We expect to come back to this and probably break it, right? We did. Once you do that, we covered this all week, so I'll cover it again. Since we didn't do a Marketcast call last week, I believe, right? A series of channels and even wedge formations for that matter. But you'll see this is why I keep them. They're great for teaching and for those that might be newer to the market that maybe aren't kind of up to speed on why we care about these things and why we follow them. And you'll notice that just in this past 3 years, we had a channel here, right? We had ourselves a channel here, Okay, little one here. So we have these like three different channels. And what you're going to notice first and foremost is, um, when we broke out of the bottom of these channels, although by definition it doesn't necessarily mean lower, it just means change of trend. You're breaking a trend channel. That doesn't necessarily have to mean lower. It could just mean going sideways for a while, taking a break could mean a change of slope of trend. Yeah. So it doesn't necessarily have to mean lower, but more often than not, right, it's going to be what we expect, whether it happens or not. So you'll notice here when we broke out of the bottom of the channel, right, where do we end up going? Broke out of this channel, right, where do we end up going? Okay. Broke out of this one, where do we end up going? Right. So the point being, in all three of the previous channels that I've highlighted here, it wasn't like a 1 or 2 day event. Okay. So 2 weeks ago, we broke out of the bottom of this channel. It doesn't matter that we rally. Okay. For some reason, traders can get in this mindset that, oh, just because we rallied for a day, the sell off is over, right? No, that's 0%. That has 0% to do with anything. Okay. We rallied any number of times. There was this bear market. It didn't mean we were done going low, right? We rallied any number of times, rallied any number of times, rallied any number. Doesn't mean much of anything. That's where you have to pan out, right? Don't look so close. Everybody wants to everybody wants to be a day trader, the lowest probability trading that there is. So we're looking at 1 minute candles, 5 minute candles, and that's actually hurting the average retail trader because they're not getting that big picture, right? So you want to pan out and take a little bit more of a, 10,000 foot view. What would you expect overall? Okay. The second thing that happened in all three of these instances, it broke, rallied back up, hit the underside of it, and then went down, right? Here, same thing. If we look a little closer, okay, we broke, closer, broke, rallied right back up, hit the underside of it, down we went. Broke, rallied right back up, hit the underside of it, back down we went again. Okay. Now, so 3 for 3. Break out of the channel, going lower, retest, back down we go, right? Now, does that mean that's going to happen this time? No. But that is why, we didn't really care that the market rallied, whatever it was on Wednesday, or even a couple days before. We would expect that. That is within the context of a lower move. No different than back here. This rally didn't change anything. This one, okay. This correction here, none of these rallies changed that we were going lower. So, as a general statement on a 1 day event, hey, we're rallying. Okay, who cares? Right? Doesn't change anything unless it does, right? So what were we watching last week? We were watching two things. Could we get back inside this channel? And by the way, as you can see, went up, retest the underside of it, back down we went. The other thing we were watching was over here. Okay. NASDAQ 100 here had a pretty good level, as you can see, going at 19.5. Tested once, twice, three times, and we broke. Okay. Again, this typically isn't a 2 day type of event. We'd expect to go lower, recover first. No different than here. We hit support, recovered first. Didn't mean anything. Who cares? Okay. That by itself doesn't mean much. Okay. What else around it? Okay. So breaking here, break here. This was the one I thought was more important. We were watching. Can the NASDAQ regain? We're breaking things on the way down. Can we break something on the way up? Okay. Very, very textbook 101 stuff here. Okay, that everybody misses because they're too busy worrying about their VWAP and their volume profiles, right? They're not looking at the most obvious thing right in front and the most important indicator in the market, which is price. Okay, price did exactly what you would expect within context of the expectation of going lower. Okay, so this is why last week on Wednesday, we're like, well, I'm not gonna get too excited about this rally unless we can take. Otherwise, we'd expect to hit this and go down, right? Doesn't mean we will, but that's, we can't trade based on, absolutes. We don't have that. Okay, so same thing here, rallied up, same day. Nasdaq hit resistance, S&P hits the underside, back down we go, right? And in a big way. Now, again, Friday actually looked I wouldn't call it a bullish day or anything like that, but it looks like maybe we can get a little bit of a bounce, and that is not happening, right? So moving lower, again, not a big surprise. Speaking of the Nasdaq over here, went into correction territory on Friday, right? So it was already in a correction. That 10% threshold that we kind of use as a barometer there. S&P would have a lot more work to go. We're getting down clear down to 5,100, but hey, looking at the pre-market, yeah, getting a little bit back, right? So it's good. It's quite possible that we get to that. And the reason why this matters is it's not uncommon, at least in my experience, where even if the market is going even lower, it's not uncommon for it to at least attempt to hold that psychological 10%, right? That, hey, no, 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 we're not going into a correction type thing. So 5100 would be something that, would be important. You come down here, I don't know that it's the end and be all, but that sometimes people can make it out to be, but it does matter. The 200-day right there. Okay, down here looks like we may have got support on the 200. Here we didn't, right? We didn't. It didn't act as resistance on the way up. So that's why I'm saying I don't know that it's the end and be all, but it certainly has done its fair share of providing support or resistance to the S&P. So I'd be looking at things like that. The 51 if we get there, the 200-day if we get there. If we pan out, all right, let's go here. Okay. Here's your bull market trend line for what that's worth. That's way back here. So pretty extended, and threw up 5100 a few times last week. And it's interesting because you can kind of almost see the newer traders versus the ones that have been around a little bit. The idea that we could fall to 5100 seems like absolutely foreign. Like that's just not possible, right? 10%. Maybe like the 10% we just dropped just less than a year ago? Or what do you mean the 30 some odd percent that we dropped less than, 2 years ago? Of course we can drop that far, right? It would be healthy, wouldn't we think? Right? Now, none of this would change the overall expectation that the bull is ongoing, but you don't go up and down in straight lines, right? So we'll see. Until the market shows us something, right? Uh, a reason to believe the sell-off is over. I think you just got to go with the path is down, and that was our view coming into the week as well. Path down, and here we are. Now, does that mean we expected a 5, 4, 7% fall? No, but I wouldn't say it's a surprise either, right? If right, always think forward. Okay, if you've been on the calls with me, every trader I've ever coached is always thinking about right now. So you have to kind of get them to start looking at things again, panning out. First off, stop looking at your little 1 and 5 minute candles. Okay, pan out. Okay, get the bigger picture. What is the flow here? Where are we moving? And I don't mean just on an hourly. Okay, pan out and look at a daily. Pan out and look at the weekly. What is the bigger move? What is the stronger current? Okay, what is the bigger picture move? So the bigger picture move for us since this breakdown here was lower. Okay, so now we ask ourselves how much lower. Okay, so we start trying to fill in those blanks and you think, what are the possible scenarios moving forward? Just like we had a scenario moving forward where we would have said this low is in if we could get back inside that channel and if the NASDAQ could retake that 19.5. Okay, so notice how when these things happen, we already know what we're going to do before they ever happened, if they ever happened, instead of reacting to what we see right now, emotional trading. Okay, which leads to over trading. Okay. Too busy worrying about what's happening right now. Okay. As opposed to, well, what is happening now within context of the bigger picture? Okay. So then I shouldn't trust a rally. So one of our trades, our biggest trades last week, we were looking pretty good on FOMC day, but we also have a bigger picture of lower, which is why even though we had calls, we hedged ourselves with puts as well. Right. So one of our biggest weeks of the year in prime time was because, hey, in no way, shape, or form are we going to be surprised if we drop. As a matter of fact, we're expecting to drop. If you want to rally, that's fine, right? Another trade we had put on, that was the big one for us was SMCI, but I think we made money in every trade we were in last week. We had Tesla, we made money on that. I believe it or not, we actually made money on the rally on this. Had we kept our puts, we would have absolutely crushed this trade because we had both. But we had made ours. But that's a whole nother conversation how prime time works, by the way. That's a whole nother ball of wax. But Burlington was one that we actually wanted to go. When we put it on, Burlington was looking great, right? And taking out this 255. We're hanging out. It's getting close to the end of the day, looking great. We bought calls, but we also know we have zero respect for this market. Zero. And by that I mean I don't trust you one iota that this will keep going, or at least I'm not going to be caught off guard and surprised if we roll over. So we bought puts as well, just as a hedge. Glad we did, right? By the way, real nice looking turnaround there on Friday, but we'll see if that holds up. I don't know if it will. Right. So having that big picture view, right, kind of helps you know, hey, should I protect myself or should I not? Okay, are we good to go? So let's come back over to the VIX. Interesting move today because let's pan out and look at the VIX because I'm, you know, I'll admit if there was such thing as quote being surprised, seeing the VIX hitting 65 today, quite the surprise to me anyway. All right, so hold on just a moment. Let me make sure everybody's with me. Got to double check from time to time. Everybody still with me? Always want to double check here, make sure I'm being heard when I don't see a lot of comments. Okay, good. Just checking. Just want to make sure. All right. So something we've talked about whenever the market does start to move a little bit, okay, is we can actually, well, if we pan out further, some of these we won't see, but what you're going to notice here, okay, well, let's start bigger first. Let's go ahead and do that. Okay. Now, sometimes a picture speaks 1,000 words, right? Or 100 words or whatever the words are. Okay. Where you're going to notice, okay, prior to now, there's been 12 instances where the VIX reached 50. Okay. Obviously, the 80, the good old 20 percenter back in the 80s, right? You got it here. There's 3, 4, 5, 6. Here's your financial crisis 7, 8, 9, 10, 11. Here's COVID 12, right? Not counting today. In those previous times where the VIX reached 59 of those 12, that is where it stopped, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9. And all we had was these three, right? Where we actually, and then that spike ended up at least being the peak for volatility, even though in well, at least these two, I'm 99% certain that the market actually went lower. And that was one of the things that helped us put in a low, like for us to be able to read it was when the markets are hitting new lows, but the VIX is hitting lower highs, right? So in other words, fear is subsiding if you think of it that way. So seeing the VIX where it's at, you know, pretty decent piece of information considering what you see here. All right. Now, market's free to do anything it wants. All right. But all we can do is go with what we see here. So when I first got up this morning, the VIX was sitting right at 50. It's like, oh, wow, this could be a great opportunity to look to buy. And maybe it is, right? Maybe it is. I don't know that I would buy or get into the market solely because of what we see here, but it is a piece of that puzzle, right? No different than when we look at momentum and whatever that we might be looking. Momentum divergences are a big thing for me. But I think when you look historically for the VIX, it does look like we could be at a point where you dip your toe in there a little bit, right? Now, I had someone ask me, kind of paying in, and it looks like we didn't lose. I was worried if we went to the weekly, if we'd lose any. Now, I know that last week, someone had, I don't even remember, but someone had asked me about, this little spike in the VIX. And a lot of times there's that generic kind of like the VIX is low, look out below. Well, okay, that's dangerously close to useless information. Dangerously close, right? Because the VIX can stay low for quite some time, right? And even when it kind of bounces along, you're not getting this major sell off of any kind, okay? As a general statement, though, right? When the VIX is low, look out below. Okay, probably closer to a sell off than you are to a, I don't know, another 5-year bull, whatever. Okay, when you get down to this area. Okay. Well, same idea with that VIX spike. This actually looked a little bit like a reversal, but what I remind everybody on Friday is there's nothing saying that that is the spike. Voila, there you go, Exhibit A. Okay, so it's always easy to say after the fact, right? That there was a VIX spike, we should have bought. Right? Well, it's kind of hard to know where that is, but again, when we look back at the history of the VIX here, there's a strong case to be made that the market could be putting in a meaningful low of some kind. And let's also not forget, I don't know that anything happening here. I don't know that I would say that changes um, that we're in the bull market. Okay, We've had a great little pop, and as you saw, by the way, here's the previous correction, right? Go back to the VIX. It was very, very subdued. Okay, not a whole lot of fear. It was a nice, orderly sell-off. Okay, so when you talk about that spike in fear, it's been a while, right? So here's 3 years. It's been a while since anything relevant has happened. Okay, you got to go back to the bear market and look. Interestingly, even that bear market was not near as again, newer traders, that feels like the end of the world if you've never been through a correction or bear market, but it was actually very, very subdued. Never even remotely got near 50. It's one of the reasons why we thought it still had more ways to go because in most of the corrections and especially bear markets we look back on, 50 had been reached, right? So the market got us on that one, right? So, wrapping that all up there when it comes to the market, I'd probably, I don't know that, again, if you've got disposable capital to work with, throwing a Hail Mary down the field, I don't know, it's a bad idea. Seeing the big spike like that, if anything, you've got, scalp a short intraday type of trade. See where we are. I'm trying to get a little bit of a bounce here, but yeah. All right. So, any questions on that market and such? Yeah, I think the VIX is telling us that historically we're in an area where market could find its footing. All right. Would that necessarily mean the end of this sell-off? Well, we'll probably need more information to kind of make that decision. But um, again, quite often what you'll see is the market hit another low and the VIX hit a lower high. And again, that can be a piece of information that helps us. Okay. So now, as far as individual stocks and such, those of you that have been with me for 17 years or 10 years or however long, you know, uh, I'm going to guess maybe the number one phrase, top phrase you'll hear me say, we will tend to rise and fall with the market. Okay. So, in other words, if you thought the market was going to go lower today or to start the week, which certainly is reasonable, notice how I'm going to guess when the market opens here in a little bit, every stock in my watch list, except maybe a couple, are going to be down, right? So, in other words, simply having gotten the market right, you would have profited. Now, think of what the average retail trader is doing, right? Trying to get like six different screens in front of them and 87 different indicators and worried about, I see it all the time. Okay, what about this? What about this? I got a new student in the coaching program that's asking me about all these different things, okay, and not looking at the big dog in the fight, which is the market. Odds are, if you had puts Thursday, Friday, or into today, odds are exceptionally high that you made money. But here's the more important factor about that, or a point about that. You could have blindly closed your eyes. Okay. If you have a toddler in your family, you could have sat that toddler on your desktop, asked them to pick some puts, and that toddler probably profited. Now, put that in perspective, right? Everything that you might possibly be doing right now to try to win in the market, a toddler would have beat you if the toddler was right about the market. The stocks, the indicators, all that stuff that we get so wrapped around and twisted like a pretzel would have been useless information if you just got the market right. Okay. So when it comes to picking individual names, bottom line, again, I'm spitballing here, but I'm pretty sure we're going to see a lot of red on the left side of my screen over here. Okay. So I wouldn't be buying, calls or puts on anything. And again, don't focus on what happens here. What do you think is going to happen moving forward? Okay. Don't be one of those suckers getting caught in suckers hour, right? Just buying puts right out of the gate and then magically, boom, the market drops. We've all been there, right? Or I mean, pops. Okay. Just like if it starts to rally, you get emotional. Oh, no, 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 close my puts, buy some calls. And then it turns and runs right back down again, right? So you pan out and have that bigger picture. Right now, I don't know if I'd be doing much of anything this morning. I'd like to see where this goes. So you don't get twisted all around. We are currently in a couple of my services. We're in the same trade, which is TLT. We're going to be in great shape. We worked this trade. I think we've been in it for about 2 months, working it into profitability, and we're going to get the exact pop we needed. So we actually entered this trade way back here. We had calls, eventually added puts to it once we saw the breakdown, and we just could not get this thing to go. So we kind of tightened our calls and puts. We rolled it into a tighter strangle. Still couldn't get it to go, so we rolled it into the following week. Still couldn't get it to go. Rolled it into this week, and last week we got this. So so we're now, and all we needed to finish the job was to get up here to the 99 100 area. So we're in pretty good shape here. This is, so we came into the market with this. Otherwise, we kind of kept the powder dry coming into the week. I do like the shorter dated trading. The Wednesday, Thursday, Friday tends to work a little better here for at least what I do. But this was in our longer term service smart trades. So these are multi-week, multi-month trades. Now, if I was going to, which is always a question, if you were going to, if I was going to do anything, I'd probably throw one of those Hail Marys down the field with some calls. You know, Again, money you can afford to lose, right? Whoops. Tesla's gonna see. We our target when we put this thing on last week was 206, right down to my little green line. But again, we decided not to keep them. Thursday and Friday, didn't quite see that coming there. But you can see how we're going to open up way down here. If Tesla makes it back to this 180 again, taking a long shot way up here at the 200s or something, right? It's hard to say. We're going to have some obviously volume jump here, but let's see. If you dropped right now, you can guesstimate here pretty easily. Here's your 200s right now, but you're going to fall. Let's say you could get to 180, right? You're gonna that's it's nearly a 25 $30 fall. I mean, you could grab these things for around buck and a quarter is what you're going to be looking at the open, right? So I could see doing something like that. And if the market keeps selling off, no big deal. If the market continues to sell off and ends up closing on a bearish tone, great. Then add puts at the end of the day, something like that. Once the market proves that to you that, hey, this thing ain't over. So you could do something like that. And it doesn't have to be Tesla. I mean, again, rise and fall with the market. If the market puts in a low today and somehow rallies into the green, again, just back of the napkin stuff here. I'm going to guess most stocks recovered, even if they didn't go in the green. Most of them probably recovered, probably do something looking a little bit like what Burlington did on Friday, right? So that's what I would do if I was going to do something. Um, right now, I don't see anything on my list that's actually not down significantly. I mean, everything's going to take some. There you have it, right? So see Tesla dropping, and oh, that 5100, that's that 10%. So we are going to get there. It sure looks like. SMCI is one of our favorites. I do need to take a look. I want to check this trade and see where we're at on this guy. So we rolled into the. So we also and then last week we rolled it out again. So yeah, we could close this out right now, and we would it'd be about 100% return on the original trade. So I think I am going to do that. So those of you that are in smart trades, I'm going to go ahead and send out this alert here. Um, just close the whole thing. Been in that trade long enough. We could roll and keep working this trade into more profitability, but we can grab about a point off this thing. If I can ever get this thing to load. Or wait a minute. Oh, I was going to say, what happened there? The price has changed. There we go. That's better. Yeah. All right. So let's do this. Okay. All right. And those of you that are in it, you can go ahead and obviously get ahead of the alert. Let's try and get this all together. Okay, there's one. That'd be nice to get that off the board, you know? We've, you guys can correct me if I'm wrong. I'm pretty sure we've been in that trade for 2 months. I know we had to roll it out for a full month. And if you want to keep it going, by the way, let me know because the other option was going to be to roll this into just take money off the table and then let it keep going. But I'd rather just be done. I don't like being in trades forever. I think it felt like forever. All right, so it should be close to about 100% gain on that. Took long enough. And okay. All right, we're done. Oh, whoops, forgot. Got to send that into the VTF there. Almost forgot. All right. So, any questions about everything market wise? As you can see, everybody see everything. See anything? Nothing. Not a thing is in the green by far and away. The biggest lesson I have to teach students is, man, you got to stop it with all the indicator BS. Focus on the market first, right? There's the cake, then there's icing on the cake. You keep stuffing your face full of icing. Get the cake down, right? The big, right? If you thought puts today, notice how you didn't need to know what an indicator was, let alone which one to use. If you bought puts on anything, you're pretty happy about it, right? That's the point. All right, let's get this up here. I got to get this little alert out, but I see it time and time again. Everybody worrying about their Bollinger Bands or their Elliott Wave counts or their Fibonacci retracements. Like, if you just look at the S&P, it broke support, sent a pretty strong message. It was going lower. Maybe just buy puts. See what happens, right? Who knows? Maybe you get lucky. All right. Now, of course, there's a lot more to trading that, but it's the pecking order that's important. Smart trades. Sorry, everybody. I'm trying to get the VTF loaded. It's taking its time. Okay. Oops. All right. All of you in smart trades should have got that alert. Good to go. All right. Any questions, everyone? Let's take another little look at the market here. But yeah, that for those of you that were on the call on Friday, right? That was we said we are going to do one of two things. If we could get a $2 jump, $52 jump to that 100 area, that we would either close it or we would roll it into a future week, take our risk off, and have a free trade. I'd rather just move on. Feel like I've been in that trade half my life. All right. So we'll see what everybody's doing real quick. Let's check out the VIX again. Yep, yep. Wow. I mean, you start getting, we're at 17.5. But you start getting down here, you start talking about a little NASDAQ bear market. Yeah. Look here real quick. Carvana's getting crushed. Everybody's getting crushed. SMCI has earnings this week. SMCI, probably our number one trade. Apple. Yeah, look at that. I can't remember last time. TLT is the only thing up. And we had the calls. Ha ha. Yeah, look at that. Every single stock on my list, every ETF, every stock down. We haven't seen that in a while. There was a lot of stocks that kind of looked a little constructive. So again, I hate to use the word surprise because that's simply what that's a part of the definition of the market, doing things you didn't expect or didn't think it was going to do. So it's kind of hard to be surprised when that's literally the definition, part of the definition of the market. You never quote master of the market or phase. Who was it that I saw? Was it URI? No, somebody. Yeah, it was ASML. That was one. I was like, somebody broke that we were trading last week right here. Nasty little fall. But yeah. So hey, look, there's nothing wrong with sitting on your hands and doing a little bit of nothing. Um, Certainly, for us in prime time and such, and the coaching programs, strangles are a big thing for us. Those that have been in it for a while know that probably the best stretch we ever had up until this year. We've done really well this year, but that's because we've really latched in on a one or two, three, four stocks that maintain their volatility, even though the markets are not volatile, right? So outside of that, the best stretch we ever had was in the 2020, um, little mini bear there, little flash bear, whatever you want to call it, because volatility was so high. And as long as we're picking the right stocks and right strikes, we were on both sides of everything we got into, and just something was going to pay us, right? So the good news for us would be volatility, right? Huge friend. Right? That's why we did so well last week. We had a big monster week last week. Um, so those of you that are joining, I don't know how many of you might be joining the open house this week for prime time. I think that's this week. Let me double check. Pretty sure it is. Yep. Starts tomorrow. Let's see. Yeah. So if you want to be a part of that, you can reach out to, Josh, Patrick, whoever. But I don't know if it was our best week of the year, but it's got to be close. And that was simply because of volatility, right? We don't really care too much. I don't mean that it's not literal. I'm saying we don't care as quite often. We are not as concerned about direction, right? As much as kind of outmaneuvering the market, if you will, and volatility is what we're always looking for. Now you can see the market, as we said, you know, VIX spiking up there. Certainly, there is the environment being right for a possible rally, but on the other hand, still down 3.5%. So now, what I did, another thing too about last week that I thought was interesting was the fact that these indices that took off by themselves, the Dow, the Russell, and the NYSE, took part. Right, the Nasdaq and the S&P had been struggling, but these guys all woke up for some reason. Okay, they all woke up. But look at that. Gave every bit of it back in 3.5 days. Look at that. Incredible. Okay. So it's another reason why, there were signs of a bigger problem, because before Thursday and Friday, it's like it was seen mostly just isolated to tech. It wasn't broad based, you know. And then once we saw, again, the Russell, the NYSE, and the Dow, which nobody wanted it for this entire stretch, and then they woke up by themselves. Now look at them. I mean, just getting knocked all over the countryside here. So yeah, I see really taking some hits there. But we saw those take part, and I'm like, oh, nice little 1,000 point down day. Let's see the Nasdaq here. Okay, and then look, right? This is, I can't tell you, this the basic 101 stuff is 10 times better than all the advanced stuff. Okay. It's just you can't get people to see that, right? Look, market recovering a little bit, recovering, 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 right? Our TLT now dropping. And this is this is so elementary, but the retail traders gotten so caught up with software programs, trading platforms, and indicators, they're not looking at the most obvious thing in the room, right? I'm going to guess again, if we roll back right back over and go into the red, guess what's probably going to happen here? So, across all the services I operate and what I teach in the coaching program is start here. If you get this right, you've got 50 to 60% of it right there, right? Of what's going, being on the right side of the trade. And then you come here, try to be on the right side of this, right? And then you go into the options and start talking about strikes and such. But okay, I'm going to let everybody run. Speaking of the coaching program, I got to get to that call here in a little bit. But remember, not every day is a good day to trade. Not every time. This is why, most people struggle, fail at day trading, right? Sitting there staring at it all day, trying to capture every little move can be a challenge. Just remember, you don't have to do anything. Okay. All I did was close out TLT. We're now sitting here with the power to dry. I want to see what the market does. If it holds this move going into the end of the day, we'll probably look at some puts, hedge it with a call or so. Okay. But if we recover, I'd say, I don't know, I can see a ton of people that are in my calls. What would you say? 90% of our trades or more are done within the last 30 minutes of the day. We do a lot of adjustments in the morning, but I'm talking about new initiations, right? Correct me if I'm wrong. Those of you that are in prime time and others. Would that sound about right? 90% or more? Isn't that last 30 or even 15 minutes where we can see what that final look of the market is? Okay. Is it closing on a bullish note? Is it closing on a bearish note? And sets us up nicely going into the following day and or rest of the week. In the middle of the day, you're still kind of fighting it out and everything. So it's kind of hard to want to get too gung ho. But so yeah, we'll wait. And then if we see something good, now of course prime time, we don't really put anything on. I have to really love when I see to put something in prime time early. But options gamble, we could put something on. If we saw a nice reversal, we could throw in just a spy smart trades or something. But we'll see. We'll see what the market gives us here. Right now, yeah. And let's be honest. It's hard to know where when you get into these correction modes. I'm not talking pullbacks. Pullbacks aren't nearly as difficult to nail down. But you get these more volatile correction type things. That's where it gets a little bit harder to say, hey, look, I think we really are. I don't want to say guessing, but come on, we might hold up at 5,100. 200 day. These are definitely areas that could give us a bounce, and who knows, could put in the low. And it's worth being aware of them. But we also want to be aware that when we start seeing the VIX spike into 40, 50, and 60 and stuff like that, the market will bottom wherever it wants to bottom. We can kind of see subsiding a little bit now, but we'll see, right? Tesla now 182, almost made it to our 180. So what was the 200? Like we talked about that. Let's talk about what was the 200 there. Let's just see what it would have been had you jumped in somewhere close to the beginning of the day, right? Okay, so here's, wow. Are you kidding me? Oh, say that can't be right. There we go. That's better. Okay. Right now, $6. Well, the best you could have done would have been around $3, but you'd already be up 100%. If you waited for 180, you're not in at all. Wow, can you believe that? If you've traded Tesla, well, never mind. We are at 195 now, 194. I guess not a surprise. All right, good deal. Well, yeah. So speaking of prime time, we've had one heck of a year. Obviously, great week last week. So we'll see if we can keep it going. Options Gambit, we've had trouble breaking stall speed, but we'll keep plugging away. You can trade the VIX any number of ways. I mean, you could trade the VIX. What's the one we used to trade all the time? We used to trade the UVXY. Remember that forever? We traded this during the COVID era a lot. So, for example, let's say you thought the low was in, all right? And you thought it was going to be rally week. Yeah, take a look here. And what do we have? 58. So if you thought it was going to drop, they're going to make you pay for it. Ooh. But if you thought it was going to drop, you could also just do like a a bear call spread or something like that. You could do look, well, boy, they got you all flipped up. Look at this. I might wait that one out. But yeah, so we've traded this, Eric. We did trade the VIX a long, long time ago, but we really weren't big fans of that. I think this was the most common one we trade, or have traded anyway. So can you imagine that if you bought calls on the VIX on Friday? Or at least, I'm sorry, on this. So let's take a look at the maybe recover a little bit. Say what we get a good recovery. I mean, I could be swayed into putting a bullish trade on for prime time, but it'd have to be towards the end of the day, and we have to really like what we see there. So, but all right, I'm gonna let everybody run. All right, thanks for tuning in. Those of you that are coming to the open house for prime time, obviously, we'll spend a lot of time tomorrow going through an orientation because it is a unique methodology that I employ. It's different. Um, yeah, I just don't really do all the stuff that everybody else does, and we do very well with it. So I look forward to seeing all of you there. Everybody else, see you on all the calls. Coaching students, I'll see you here in about 10 minutes or so. All right, everybody, have a good one.